I think if you think of where we were 2008 and where we are today, there definitely is room in a different environment for regulatory change to promote growth. And I think we saw that last night, quite wide-ranging, from capital to ring-fencing rules in the banking sector, SMCR, a focus which was of particular interest for us on retail investing.
Yes.
I think Rachel mentioned a statistic of 30 million individuals with cash sitting earning less than 1%. That's a big opportunity for change. And for us, I think that's a real positive to hear it from Rachel and across the whole room of we need to make change. The UK they're great savers, but how do we make them great investors too?
Well, on that point, the government backtracked on changes to ISAs, and I wonder how disappointed you were by that move, and I suppose what will it take to encourage people into moving, taking more risk appetite with the prospect of more reward?
I think what was removed last night, a lot of those barriers to just get started into an ISA. So advice guidance, I think that's a significant gap in the UK. People who would like to get advice or would like more confidence to start investing just have nowhere to go. So I think that's a great step. Risk warnings, we certainly have created unintentionally, I think, an unequal customer journey where cash looks more attractive because it doesn't have a risk warning, where in fact over 10 years will earn significantly less than investments. So no change to ISA today, but I think a lot of those journey barriers removed, and certainly heard from the Chancellor that the door was open, and we've been engaged in a lot of discussions on what could that be, but I think positive direction.
Okay, positive direction, but this needs to have a major impact on the UK. It doesn't sound like that those are that is what has emerged from Mansion House. How important do you think this publicity campaign is going to be to encourage Britons to invest in equities? Do you think it will work? Are you going to be involved at Robinhood? Is that something that you're going to try to engage with?
Yes, I am on the steering committee, and Robinhood is involved. I think you have the right people in the room engaging with HMT and the FCA as well, so everyone's on the same page, thinking about this not just in the short term, but what can we do over 5 years. There's a significant education gap, significant confidence gap. We found that in our own research. Some individuals thought they needed £2,283 to start investing. That's of course ridiculous. You need £1. So I think there's a good opportunity to bridge that financial education gap here in the UK, better awareness, provide advice, remove some of the unnecessary risk warnings. And then I think it's also on the platforms, right? Our view is that a stocks and shares ISA shouldn't have a fee. Why is that an additional barrier for customers? Why should you be charging high commissions as well? All those things that make people just think, oh, I'm just going to go put it in cash.
Yeah, and that would be the big bang, wouldn't it? Removing stamp duty on stocks would be a major change, and it would allow people in the UK to invest in UK stocks without that additional tax, versus, let's say, putting your money, investing your money in a US company. Why does the Chancellor not do something quite dramatic like that? I mean, obviously it's to do with the revenue intake, but that would create a big incentive and a big change for Britain.
I think the important place to start is to just get people investing, get people out of this 1% cash habit. In the UK, relative to the OECD, I think it's 12% better savers than the rest of the OECD. But how do we change those habits? That capital then does trickle down into UK equities as well. I mean, the FTSE hit 9,000 yesterday. It certainly is a good performing asset class over the H1 of this year. And I think where the world is, people are certainly looking at their portfolios and say, well, how do I have exposure to markets other than the US? I think if you make sure that you get people investing, the rest comes with it.
Does there need to be a bit of a push for people out of cash ISAs as well, though, rather than necessarily drawing them into stocks and shares? I mean, Fidelity was saying there could be a warning saying that inflation could erode the real value of your investments on regular ISAs. Would you be in favour of a move like that?
I think that's the type of education customers need. I think that we have to be wary of not going into a world where we now have more risk warnings on cash, the same risk warnings stay on investing, and customers just put it under their bed. I think what you get is just basic education, and targeted support should really help that journey. A customer who is earning less than inflation could actually have the risk appetite for investing. Can we help them? Today, no. With advice, guidance and targeted support, yes. A simple nudge to say, hey, someone like you is investing in the FTSE 250 or a simple iShares ETF, earning this return over time to help them get to their goal of buy a house, pay for school fees, medical bills. The same goals that we see our US customers that they have in their lives, that they get there through investing. The UK individuals for a long time has just thought, I'll just save cash. And they just take longer to get to those same goals. So I think that education piece on what your money could do to work for you, we can get there.
Look, it seems quite positive. The people that we've spoken to, the Mansion House speech seems to have been well received by the financial sector, particularly when you look at Brexit and the industry that generates this huge number of jobs and huge amount of tax take. We all know the figures, was ignored effectively, if not sidelined, really. And that seems to have changed. Is there going to be a massive hammer blow in the autumn budget when the Chancellor raises taxes, mainly potentially more wealth taxes, which is what the Parliamentary Labour Party seems to maybe want or be in favour of, and maybe even a bank tax? That would be a real hammer blow, surely, to the sector.
And I think what was clear in the room last night is you had everyone from the financial service and professional sector, all who have a responsibility to be positive and take that message and see this change as a step forward. I think we've been asking all of us for some of these changes, and you had the PRA, the FCA, the Bank of England, the Chancellor, all, I think, in lockstep last night and nodding towards positive change. And if we grow as an economy and we make these changes and remain competitive, become more competitive, I think you get to the end of the year and perhaps we're in a different place. So we can't necessarily crystal ball as to what that impact would be. But there seems to be a very strong focus on how do we make London and the UK more competitive, not at the moment, but going forward and back to that financial services and financial global hub of the world.
What do you think of the Chancellor's announcement of a task force to bring new listings to the London Stock Exchange? Do you think that really helps?
You know what? I think you should be looking at it, right? What are the barriers for some of these companies? Both those who are at a growth equity stage here and thinking about where they list, those that are already listed in the LSE and saying, I might want to move to the US. Spend time with those businesses, understand from their boards, their CEOs, their investors, what are those barriers, and then think about how you can address that. I think that's the most important way.
I thought that is what the government had been doing with companies that were potentially going to list in the UK. I mean, things like the offer to Shein. And London saw its worst first half of this year for IPO listings in like 28 years. The government has been doing that outreach, but it doesn't seem to be working.
I think there's a short time frame to focus on. There's like the Capital Markets Industry Task Force who've been looking at a lot of this, the prospectus review, some of those rules have come in. There's good initiatives, things like Pisces. I think there's lots of small initiatives, but I don't think we've yet seen the addition of all of those into an impact, and that takes a bit of time. So I think all of these efforts are great. I think we need to keep doing them and then look back over 24 months and say, what change did that have? So I think we're maybe at the halfway mark, and we just need to keep executing. The Lord Mayor said last night he would have liked his campaign to be called Just Get On With It. And maybe he was rolled back from that, and I think he said Growth Unleashed. But I think that's the way we probably need to think about it.